Welcome back to Currency Revalue, where we break down the truth behind Iraq's financial and political developments shaping the dinar's future. Today's report dives deep into a story that's stirring debate across Baghdad, accusations that the Iraqi government has deliberately delayed the national budget submission to Parliament for political advantage, just as the foreign exchange market comes to a complete standstill during the election holiday. At the same time, new signals of regional cooperation between Jordan and Iraq hint at a brighter energy future. This episode connects the dots, from political maneuvering to economic opportunity. In a bold statement this week, Member of Parliament Mustafa Khalil accused the Iraqi government of intentionally withholding the national budget schedules from the House of Representatives. Khalil's remarks, shared with dinar-to-dollar.com, sent ripples through political and financial circles alike. He claimed that the government has deliberately withheld the budget schedules from Parliament, despite repeated requests, framing the move as an electoral pressure tactic meant to secure political leverage ahead of the parliamentary elections. This delay, according to Khalil, is not a simple administrative hiccup, it's a calculated strategy. By keeping critical fiscal data under wraps, the government can shape the timing and perception of key spending decisions, potentially appealing to specific voter blocs. The accusation highlights a broader issue, the intersection between governance and election politics in Iraq's evolving democracy. Khalil warned that the obstruction has already caused serious legislative disruption. Key parliamentary committees responsible for overseeing financial allocations and provincial projects have been forced to slow or halt their work entirely. This bottleneck has delayed infrastructure projects, social spending, and regional funding, issues that directly affect citizens across Iraq's provinces. He emphasized that accountability must follow. In his words, the next parliament must revisit the issue and hold accountable those responsible, underscoring that these political maneuvers have real economic consequences. The delay doesn't just stall paperwork, it impacts livelihoods, slows provincial development, and undermines the equitable distribution of national resources. While political tensions simmered, Iraq's financial sector entered an unusual state of stillness. On Tuesday, foreign exchange activity across the country virtually froze. From Baghdad to Erbil, and from Mosul to Basra, currency exchange offices and money remittance companies shut down for the national election holiday, marking one of the quietest trading sessions in months. Local traders described the scene as surreal. Markets that normally buzz with activity were completely silent. Large currency dealers were shuttered, digital boards went dark, and even street-level money changers paused their business. A handful of small-scale cash exchanges continued in residential neighborhoods, but these were limited to personal transactions, far from organized trading. The result? A complete absence of pricing movement or official rate updates. Market analysts described the session as effectively frozen, with no new quotes emerging. During the final active trading session on Monday evening, the US dollar remained steady in Baghdad at 142,750 IQD for selling and 140,750 IQD for buying per $100. In Erbil, minor pressure nudged rates slightly higher, 141,350 for selling and 141,250 for buying. These figures represent some of the most stable intra-week levels in recent memory, reflecting an underlying calm before post-election adjustments. The closure was, of course, tied to Iraq's sixth parliamentary election since 2005, declared a public holiday to ensure higher voter turnout. Once voting concluded, financial institutions were expected to reopen and normal trading to resume. Still, this momentary standstill underscored how deeply Iraq's political rhythm influences its financial pulse. While domestic politics dominated headlines, a major development quietly unfolded on the regional stage. Jordan and Iraq are exploring a new solar energy partnership aimed at bringing clean, affordable power to Iraqi homes, a move that could reshape Iraq's energy landscape and boost economic resilience. Jordan's Minister of Energy, Salah Al-Karabsha, chaired a meeting of the Energy Partnership Council to discuss expanding cooperation in renewable energy. The initiative stems from a proposal by Iraq's Minister of Trade, Dr. Athur al-Ghurari, unveiled at the Iraq Investment Forum 2025 in Baghdad. The plan envisions leveraging Jordan's expertise in solar technology to develop residential solar systems for employees of Iraq's Ministry of Trade, a model that could later expand nationwide. Under the framework, Iraq's General Company for Construction Materials Trading would oversee implementation, while Jordan provides technical guidance and private sector support. According to Al-Qarabsha, this presents a key opportunity for the Jordanian private sector to participate in Iraq's growing solar energy projects. This partnership symbolizes a new kind of regional alignment, one built not on oil, but on renewable energy and sustainability. Jordan's Secretary General of the Ministry of Energy, Amani Al-Azam, led technical talks with private firms to finalize operational plans. Several companies expressed strong interest in joining the project, highlighting the mutual economic and environmental benefits. Both nations see renewable energy as a way to diversify away from fossil fuels and strengthen long-term regional stability. For Iraq, plagued by chronic power shortages and grid instability, the initiative represents more than an investment. It's a strategic step toward energy independence and modernization. As Iraq enters a new political and economic cycle, the contrast between short-term political gamesmanship and long-term regional cooperation is striking. On one hand, accusations of deliberate budget delays underscore the continuing challenges of political maturity and transparency. On the other, new cross-border energy projects signal hope, the promise of transformation through innovation and collaboration. For investors and observers in the currency revaluation space, these developments matter deeply. Political uncertainty affects fiscal policy, while energy diversification impacts national revenue and financial stability, both critical factors for the Iraqi dinar's trajectory. At Currency Revalue, we'll continue tracking every indicator, from parliamentary shifts to foreign partnerships, that could influence Iraq's monetary future. So make sure you like, subscribe, and stay tuned. The dynamics shaping Iraq's economy are accelerating, and the story of the dinar is far from over.